Today's question is, what is the gold-silver ratio? Well, the gold-silver ratio is a way of comparing the relative value of gold to silver by comparing the price of gold to the price of silver. The ratio is very simple to calculate. All you do is you take the gold price and divide it by the silver price at any given point in time. The calculation works in any currency as long as the prices of the two metals are in the same currency. So for example, if the gold price in US dollars is trading at $1,800 per troy ounce, and at that same time the price of silver in US dollars is trading at $25 per troy ounce, then that gives you a gold-silver ratio of 72. So really what you are measuring with the gold-silver ratio are the number of units of silver that you need to acquire 1 unit of gold. In other words, how expensive is gold relative to silver, or how cheap is silver relative to gold? And because it's a popular metric and easy to calculate, you will see the gold-silver ratio quoted widely on commodity websites and more mainstream financial websites. Really, one of the most useful aspects of the gold-silver ratio is when you plot it on a chart over time, because this plotted chart shows a trend of the trading range or bands within which the ratio moves and its momentum. And historically, the gold-silver ratio trades within these trading bands, and at some points in time it moves above or below these trading bands. So sometimes you'll see chart analysts or traders or chart watchers saying that the gold-silver ratio has moved outside its historical trading range, either on the upside or the downside. Now, if you look back to 2011, May 2011, the gold-silver ratio reached a multi-year low of 33. And then since then, for around 9 years after that, up until early 2020, the gold-silver ratio was on an uptrend and it hit around 90. Then in March 2020, during the extreme financial volatility of that time, the gold-silver ratio hit a peak of 123. And that peak actually was an all-time high for the gold-silver ratio. And then it stayed elevated, but started going down slightly in the next few months after March 2020, and then since then has come down to the 80s and the 70 range. Now, the reason that the gold-silver ratio reached a multi-year low of 33 back in May 2011 was because of the fact that the price of silver was rising a lot more rapidly at that time than the price of gold, meaning a low ratio. And vice versa, if you look at the March 2020 peak of 123, that was caused really by the fact that the price of silver was declining a lot more rapidly than the price of gold around that time. So what does the gold-silver ratio tell us? Well, over the long term, you can see that the gold-silver ratio does trade in various trading ranges, and that sometimes it moves outside those trading ranges. So traders will say that the ratio usually reverts to a mean or a long-term average, and if it's outside those normal ranges, in more extreme non-normal numbers like 123 or 33, then people say that it will revert to its mean. And that's why you hear traders maybe saying that gold is expensive relative to silver, or gold is cheap relative to silver. So it's a fascinating metric and one that it's really well worth knowing about. So if you want to look at the BullionStar website, on the interactive charts page, you can actually chart and create your own charts of the gold-silver ratio. All you do is you select precious metal gold from one of the drop downs and precious metal silver from the other drop down, and the time period you want to measure it in, and you can create your gold-silver ratio charts. The BullionStar website gold price page, which is a page of live gold prices, also has the gold-silver ratio live, so you can look at that page also.